last weekend rather. And can we all see my screen?
Yes, we can see your screen.
Okay, nice. All right. So today we are going to start by looking at what we mean by engulfing and engulfing fail. After looking at engulfing and engulfing fail, we'll look at how to frame intraday setup, and then we'll also look at how to map out weekly setups as well, or swing setups rather. So engulfings are very important because everything in the market is about engulfing and engulfing fail. Whenever we have trends in the market, it's just engulfing and engulfing fail. When an engulfing happens on higher time frame, it simply means that on lower time frame there is going to be a breakout. So that's why we pay attention to engulfing. And when we talk about engulfing simply means that a candle swallows up another candle. For instance, you can see my screen now. If you have a bullish candle like this, let's assume that this green candle is a bullish candle. And then we have, after the bullish candle forms, we have a bearish candle that forms after it. And a bearish candle swallows up this bullish candle. So this is simply what we call an engulfing. The body of the candle that engulfs, I want to teach us, please pay attention to this, because when you understand this, a lot is going to change very well in your trading for good, or for the best rather. Now, if this is a bullish candle, followed by what? A bearish candle. And the bearish candle completely swallows up a bullish candle. This is what we call an engulfing scenario. So the bullish candle, the body of the bullish candle, of the bearish candle, sorry, the body of the bearish candle must close below the wick of this bullish candle. The whole candle must be swallowed up. So we're looking at everything on the green candle being swallowed up. Don't worry, I'll change this color so that we can see it. So everything here, the candle must swallow up the entirety of the other candle, not just the body alone. Both the body and the wick of the green candle must, the body of this red candle must close below the wick of the green candle. That's when we have an engulfing. So this is what we call a bearish engulfing pattern. When you have a bullish candle being eaten up or being swallowed up or being engulfed completely, both the body and the wick, by a bearish candle, we call it bearish engulfing pattern. Are we together?
Yes. We're together.
Okay. So this is what we call bearish, and you have to pay attention wherever you see patterns like this, because if you have an engulfing on a higher time frame, it means that there will definitely be a breakout on lower time frame, as we're going to look at. So that is why we pay attention to engulfing levels, because they are very, very important levels. So this is a bearish engulfing. On the other hand, we are going to look at a bullish engulfing. In such case, you will have, first of all, you have a red candle, a red candlestick, and then I'm using red and green because that's what most people use as their candlestick, even though me, I'm using black and green for my own, but it doesn't matter. It's any color that you choose to use that works for you is fine, right? So if you have a bearish candle followed by what? A bullish candle that eats it up to the upside. let our bullish candle be green in this case. So you have a bearish candle that formed. Then after the bearish candle, you have a bullish candle that swallows it up, that eats up the bearish candle, both the wick and the body of the bearish candle. That is what we call a bullish engulfing. This is a bullish engulfing scenario. And it happens on higher time frame. It can happen on weekly, it can happen on monthly, it can happen on daily, it can happen on 4 hours, even 1 hour. We are going to look at examples, right? So, are we together?
Yes.
Okay. So we have a bearish candle being completely eaten up, or permit me to use that word, being swallowed up by this one, because this one is bigger than it. So it has engulfed it. So this is a bullish engulfing scenario. That's the first type of engulfing. Now, another type of engulfing that I want to teach us today is, pay attention, please, don't miss this. In other cases, you might not see one candle swallow up this candle. You might see a candle like this, then followed by another green candle. This is still an engulfing. Are we together? Hello?
Yes, we are together.
So this is another type of engulfing. In another case, you might see two bullish candles swallowing up this kind of candle. If it happens at key levels, you pay attention to it. It is also an engulfing. It doesn't necessarily have to be one candle alone that engulfs another candle. It can be two candles that engulf one candle. It is still an example of bullish engulfing. In another case, you might even have three candles swallowing up this candle. Is still another type of engulfing. You can have this, and then you have another third candle again. This is what the Malaysian people, they call it dummy break. When you have three bullish candles swallowing up a bearish candle, it is a dummy break, and it's also a form of engulfing. So you can consider this as a bullish engulfing as well. This is also an engulfing pattern. So it mustn't necessarily be a single candle. It can be two candles. It can be three candles that engulf the candle before. It is still an engulfing pattern. In this case, this is a dummy break. You have a very strong bullish impulse, which is making you to have three consecutive bullish candles swallowing up or eating up a bearish candle. So this is a bullish dummy break, which is also an engulfing. So you can have two candles engulf a bearish candle, is a bullish engulfing. You can have one candle engulf it. You can also have three candles engulf it. It is still an engulfing pattern. And you must pay attention when you see such pattern form at key levels, on weekly, on daily, and otherwise, as we're going to look at examples in the chart. Now, let's proceed. Can we all hear me?
Yes, I can hear you loud and clear.
If you are following,
yes, but
following.
not too very loud.
Are you sure it's not your this thing that is having fault? Because I'm shouting here.
Okay, but I can hear, but
so
I'm just
Emmanuel here as a point of contact for those who are still waiting. You will not be waiting for long. In the mighty name of Jesus. Whatsoever might be the
Someone is playing it.
Somebody was playing something.
I can hear you clearly.
Okay, I
clearly,
can hear you.
I'll be very loud and clear.
Yes, I can hear you.
Hear you clearly.
All right, all right. So this is an engulfing as well, right? Another, like, so you can apply this to the case of what we look at initially. You know, we're talking about a bullish candle can also be swallowed up or engulfed by three bearish candles. It doesn't necessarily have to be one bearish candle. It can be 3 bearish candles. So you can have this, followed by this, followed by a third one again. This is also an engulfing pattern. If it happens at key levels, you should pay attention to it. So it must not necessarily be one candle that eats up the other candle. It can be 2 candles or 3 consecutive candles that swallow up this. So this is what we call dummy break. You have 3 consecutive bearish candles eating up a bullish candle. So this is a dummy break. And if this happens, you pay attention to this level. It is also a form of engulfing. Are we together?
Yeah.
Is there any question so far before I proceed?
No question.
Everything is well understood up to this point.
Yes.
Nice, nice, nice. Okay, let's proceed. Let's proceed. So in the case of engulf fail, let me explain what an engulf fail means to us, because it's very important that we have that understanding. Very important that we have that understanding. If you have something like this, let's say you have a bullish candle. Okay, let's say you have a bearish candle like this. Then after a bearish candle, you have a bullish candle following or forms after it. Please pay attention, because if you know these things, happy are ye. Your trading will change 360 forever. So you have a bullish engulfing like this. And normally, if you have a bullish engulfing, what price should do is that if price retraces and come here, it should keep going up. True or false?
Yeah.
Normally, if price come here and it reacts on an engulfing, what we expect is that price should react here and keep pushing up, because an engulfing is like a breakout if you go to lower time frame. So that's why you see that whenever price reacts at engulfing level, price keep going up. But instead of price to go up in this case, you see something like this. You see something like this. You have a bearish candle will come here. Might be 1 candle, might be 2, it doesn't matter. Instead of buying, you see that price will now break and keep going down. So this was an engulfing candle. And when price come here, price is supposed to buy. But instead of buying, price will keep selling. So that means the engulfing level, price will break it. Price will break it. Price will break this engulfing level, the support of the engulfing level. And it has to be, don't forget what I taught you, it has to be both the body and the wick of the candle must be swallowed, must be broken. If the wick of the candle is not yet broken, it's not yet an engulfing fail. So if once the wick of the candle breaks, you have an engulfing, and then instead of price to keep buying from here, price breaks the level and keeps going down. This is what we call an engulf fail. An engulfing that failed. This is an engulfing. When price retraces, a price should buy. But instead of buying, price now breaks and keeps selling. So we call it an engulfing fail. So in the future, price will retrace and come back here. You see something like this. Price will come back inside this place. Price will come back into the engulf fail zone. Price will come back into the engulf fail zone. And then what will happen? To keep selling from there. So keep going down again. This is an engulfing field scenario that always happens whenever you want to see great moves in the market. You have an engulfing that failed. Our price will retrace back to test the engulfing field zone, which is inside this candle here, this candle that was broken, the engulf field. So when price retraces back inside it, we look for sell continuations from there. It's like a very powerful level to take trades from, right? Are we together?
Yeah.
There's only one person that is responding. Is it well understood?
It's clear.
It's clear, right?
Yeah.
Okay, let's go to the charts and look at the examples of what we're talking about. Now, you must not forget that these things happen repeatedly all the time. But on higher time frame, it takes time before they will keep happening again and again. But they happen more frequently on lower time frame, right? It is four 4-hour candle that make a daily candle. So that means there's a likelihood of you to see engulfing and engulfing more easily on what? On 4-hour time frame than on daily. True or false?
True.
Please, let's respond now, so that we know that you are following me. Okay. Let's continue. Let's continue. So if we are looking at examples of engulfing on this higher time frame, like weekly, now this was an engulfing. You see that this bearish candle was swallowed up by this bullish candle. So that's an engulfing. And that's why you see that when price retraced back here into this level, it tapped in and started selling. Why? Because this is an engulfing plus a support. So you keep seeing them on almost all the major places where trades are happening from. This is an engulfing field. This is an engulfing. Can you see? This is a bullish candle swallowed up by what? A bearish candle. So which makes this place an engulfing. Pay attention. Are we together?
Yeah.
So this is a weekly engulfing field zone here, because this candle was swallowed up by what? This candle. True or false? True.
True.
So this candle was swallowed up by this candle, meaning that when price retraces here, price should keep selling, because this is a bearish engulfing. But instead of selling, what happened? Price broke. Price broke. And it now closed where? It closed above it. So now we are retracing back into market. Can keep buying from inside this zone, because this is a weekly engulfing zone. We don't know what will happen this week. But for market to buy, market must first reach a level here that causes the break on a lower time frame. So if you go to daily, you might find that level that causes price to break, which is here. So if gold comes here and we see a daily bullish storyline, we can buy, and we can expect market to keep buying from here and keep going up. The retracement might not necessarily have to go all the way down to, the weekly levels below. Why? Because this is a very strong zone, because it is an engulf fail zone on the weekly. So price can react from here and keep selling. We're going to analyze the market for the week we are in, so that every one of us can have a perfect understanding. Can we all hear me? Someone say my line is breaking. Hello?
I can hear you.
It's better now.
Okay, sorry about that. Can we all hear me?
Yeah.
Clearly?
Yes, I can.
Yes, we can hear you clearly now.
Okay, better. Okay, so if this comes here, we can, because this is a weekly engulf fail zone. I'm trying to give us examples of what we just looked at. This is an engulfing fail, bearish engulfing. Price came there, instead of selling, it broke the zone. So when price returns there in the future, this is a weekly engulf fail zone. So if we see a change of storyline here, we can look for buys on the weekly, right? On the other hand, this is a weekly bearish engulfing, because this candle, this bullish candle, was swallowed up by how many candles? 2 candles. It's still an engulfing. It doesn't necessarily have to be only one candle. That was what I was explaining to us. So this is also a form of an engulfing. And if price retrace and come back here, market can sell from any of these levels on the weekly, either from this weekly open and close, if we see a change of storyline, or from this weekly apex, we can look for sales if we see confirmation. Are we together?
Yeah.
So that is how we find examples of this. You always see them. This is an engulfing on weekly. They are always happening. This is an engulfing, bearish engulfing. A bullish candle swallowed up by what? A bearish candle. This is also an engulfing. A bullish, exactly the same example. This is a dummy break. You have a single bearish candle being swallowed up by what? 3 bullish candle. 1, 2, 3. This is a dummy break. And it's also a form. That's how you saw that when price came there, even though price did not hold for long, maybe because monthly was bearish, but you saw that there was a reaction there, and price retraced temporarily, bought from there before it kept selling. Why? Because this is an engulfing level. So you always see these patterns form on all time frame. Then you go to daily. You also see examples there. Almost all. This is an engulfing. This is a bearish engulfing that happened on Friday. The candle that was formed on Thursday was swallowed up by the one on what? On Friday. This is an engulfing as well. This is an engulfing here. This candle, this singular bearish candle, swallowed up by what? By 2 bullish candles. This and this. It's also an engulfing. This is another engulfing. So you pay attention to engulfing levels. It's very important that you combine engulfing with SNR. As you are trading support and resistance, you must have an understanding of engulfing and engulfing fail. Let me show you something that happened this week in the trades that we took. The sale that happened that I posted on Thursday, it was on Friday. This is an engulf fail zone. Look at this. Now, when I framed the setup, I said, okay, this was a weekly left shoulder. True or false? True. This is a left shoulder. Price broke it, came back to retest it, and we have a rejection, which was a daily reject daily. And it gave us what? A H4 resistance. We had ourselves a H4 resistance. If you go to 4 hour, you see the resistance there that formed as a result of the daily reject daily. True or false? Hope I am not too fast to.
We are following gradually.
Okay. So that was it from that. But if you go to 4 hour now, what makes that level strong is that this is an engulf fail zone. Look at this, this candle here, this bearish candle, right? It was swallowed up by the bullish candle. So we have an engulfing here. So when price retrace here, price is supposed to keep buying from here. Price is supposed to buy from here. But instead of buying, what did we have? Price broke the level. So you have an engulf fail on what? On 4 hours. So what price did was price retraced inside here to sell from where? The level, the H1 level here that caused this break. And if you go to 1 hour, you see that level, either on 1 hour or 15 minutes. Let's check on 1 hour. Yes, on 1 hour, this was the level that caused the break. This level here that caused the break. And that's where price went to the peep. And it gave another breakout and it kept selling. Very clean trade. So that is what happens. You must look for these patterns on every time that you're looking for trade. For instance, they sell where they started from the other day was an engulf fail zone even on 1 hour. When an engulf fail happen on 1 hour, know that structure has changed and market is about to start pulling in another direction entirely. For instance, we had an engulfing here. This candle here was engulfed by this candle, meaning this is a bullish engulfing on 1 hour. True or false? True.
True.
So if price come here, price is supposed to buy and keep buying, but price did not buy. It just do as if it buy, and then it broke the level. So this place now become what? An engulf failed zone, an engulf level that did not hold, that price broke. So when price broke, remember I said the break must be below the wick. So the wick of this bearish candle was broken by this candle. Now price will retrace back inside this zone. Now inside this zone, there will be a level on 15 minutes. If it's 1 hour, the level should be 15 minutes that caused this breakout. So you go down to 15 minutes and you will see that level, the 15-minute level that caused the break, which was here. Hope I'm right. Yes, which was here. This is a 15-minute level that caused the break. The price came into there and it started selling again. So that is how it is done. You keep seeing these examples over and over again, So please pay attention to engulfing and engulf field and attach them to your trading of SNR because it will change your trading. Your win rate will increase drastically as you begin to apply that to your trading. Is there any question? Please ask questions. I want to hear questions.
Hello?
I can hear you, sir. Go ahead.
Yes, I'm trying to I want to make sure that I understand exactly what you're saying. You said when we either the weekly or daily or 4-hour level, wherever we see an engulfing and we see an engulfing field, for example, if we see an engulfing field on a daily, we should go to 4-hour. We are going to see where where the failure is being caused by maybe a candle or a level where that thing is caused, right?
Yes. That was talking
like
about.
We go to a level lower.
Yes, I'll teach that when I want to teach entries. But I get your question. Now, what I'm saying is, thank you for that question.
Okay.
Are you done with your question or you still want to add more on it?
Yes, I think that's the clarity I need to know. That if we see an engulfing field, that from what you just said, that if we go to a lower level, we will see where where the initiation of that break is happening. I just needed to be clear of that.
Yes, sir. Thanks for the question. Yes. So this is the order that it happens from my own back testing. Truth is, nobody taught me this. I just discovered it from my own study, and important to pay attention to it as well. Now, if this weekly level here, if it is a weekly engulf field, you go inside that weekly engulf field, you go and look for the daily level that caused the breakout of the engulf zone, and then you look for trade there. For instance, if it is 4 hour now, you go to the 1 hour level, the 1 hour level that caused the break of the engulf field zone. For instance, then if it's 1 hour, you go to 15 minutes. So that is the order. If it's weekly, 1 time frame next to it. If it's daily, 4 hour. If it's 4 hour, 1 hour. If it's 1 hour, 15 minutes. Because here was an engulf field zone on 4 hours, true or false?
Yes.
Please answer me. Can you hear me?
Yes, sir, I can hear you.
Yes. So since this is an engulf field zone on 4 hour, there is something here that caused the break. There's a momentum support level or resistance. There's a momentum resistance level that caused this break here to happen. That caused the break of the zone. The whole of this candle here to be broken.
Okay.
So something here caused that push down. So you go inside here and look for that thing inside this place where the break happened. And you go to 1 hour. Since it's 4 hours, you go to 1 hour inside here and find that thing. Now, if we go to 1 hour, we'll find out that this was the momentum resistance here that caused this push down, that broke this zone. So that is where price always retraces to most of the time before you start seeing the sell. That's why you saw that when price retraces, look at it, so clean, came back here and it kept selling. Are we together?
Yeah.
Let me give us another example that happened on Thursday. On Thursday, I posted this setup. I posted it in the morning for a buy. It was here at this level here. The price kept playing around here, playing around here. Now, this is a 4 hour level. True or false? Are we together?
Yeah.
Now, this is a 4 hour level. And then price, well, this one is an engulfing level. This is not an example of an engulf field. But I want to show you an engulf field that happened on 1 hour for the buy inside this 4 hour zone. You had a 1 hour engulf field. Look at the engulf. This candle here, this bullish candle here, was first engulfed by this bearish candle. True or false? Can you see my screen clearly?
Yes.
Yeah.
This bullish candle was swallowed up by this bearish candle. True or false?
Yes. Which
makes it an engulfing. So when price retraces here, price should sell from here. But instead of selling, what happened? Price broke it. So you have an engulf field. An engulf field for buy. Do you understand? So the next candle now retraces back into this engulf field zone. To the engulf field zone. The engulf field zone is this candle here. And where did it touch before it kept buying? 15 minutes. If you go to 15 minutes, we see the candle that the buy started happening from. It doesn't need to touch the base of anywhere inside the candle that it touched. It can keep buying. That's why you see that it just touched the candle at the week. Look at it. Just touch. This is the 15 minutes momentum that caused the push that breaks the engulf fail zone. So that 15 minutes, price came to retest it, and immediately price started to fly. So that's how it happens. I don't know if my explanation makes sense.
Yeah.
Please, we have to understand
Yes.
this very well because this is a very
Yes,
powerful.
but please, can you go back to the 1 hour chart?
Okay, sir. This is 1 hour chart.
Now, I'm trying to make a reference to the engulf field that you just explained now. Yes. Now, you see that, yes, from where we are, we have an engulf field to the buy side, right?
Yes.
Now, when price returns to that fresh level to the sell side now, on the other side.
Here.
Yes. Now we have that price. Now, do we call this zone an engulf field zone also? Because
yes, it's an you are right. Very correct. It's an engulf field zone.
Okay, because price came and break that zone, right?
Yes.
And so like we're on a 4
hour. If you go
now,
to 4 hour, you see it clearly. I understand your question. If you go to 4 hour now, they engulf this and engulf. True or false?
Yes.
Because this bearish candle was engulfed by this bullish candle.
Yes. Yes.
So that makes this what?
It makes that place an engulf field zone.
An engulf field zone, correct. So the whole of this zone now is an engulf field zone. Price has not yet retested it because this level, this week here, this is a candle that broke the week. This candle here. Remember, I said it must be from the week to the week of the candle. It's not just the body of the candle. It must break the week as well. So this candle did not break.
Hello?
Hello, can you hear me?
No, I did not hear what you said last.
I said it must be the week of the candle that we break, right?
Yes.
So this this candle actually broke it. This candle broke, caused the engulfing. This is what caused the engulfing. So there's a level here that caused the break. And if we go down to 1 hour,
1 hour,
you might see that level, which is this open and close level. Here, it is not, it didn't give a momentum, this thing, but if you go to 30 minutes, you might see the momentum there. That's why you had this that day. The price retraced back immediately. It doesn't need to wait for 100 years before. It retraced back immediately, tap in there, and it kept selling. So that was also an engulf field on 4 hours, right? And if you check 1 hour, you see it's more better because this was an engulf field. That was why price kept selling because this candle was the one that broke this. And there's something inside here that caused the break, which is this 1 hour open and close. This 1 hour open and close. If you check, if you refine to 1 hour, if we refine to 1 hour, we'll find that this is also an engulf field on 1 hour here. Are we together?
Yeah.
And this was what? The candle that broke this level.
Broke it.
So something happened here. If we go to 15 minutes, we'll find the level here that caused this break on the 1 hour. Go to 15 minutes. Go to 15 minutes. Can you see? Look at the 15 minutes engulfing here. This engulfing. I told you engulfing doesn't have to be one candle. So this candle was swallowed up by these two candles, which is an engulfing. Price retraced here and what? Kept selling. Are we together?
Yes.
Yeah.
So that is a sweet example of what an engulf field zone. So this zone has already been tested. And yeah. So did I do justice to that? question.
Yeah, I think I understand the flow of the idea now.
All right. Can we proceed? Can we move forward now?
Yes, sir.
All right. So that is that on that. Please always pay attention to what I just taught you now. If you change your trading, trust me, everything will change 360 for the best. Okay.